So how does income tax impact your cash flow statement? Tune in right now. All right, so let's admit it, we all hate taxes, right? I mean, we know we gotta pay them, but we're not really the biggest fan of wanting to have to pay more income taxes because that's money that we worked hard for, and have to give it up is not our favorite thing. So what can you do? First and foremost, how does it impact your cash flow? And then secondly, are there ways we can actually reduce our taxes? Well, hang in to the end of this video. I'm gonna give you some of those examples right now. All right, so it's no doubt, does income tax affect our cash flow statement? Yes, of course it does, right? The more we pay in taxes, the less we have in cash flow, the less we have in profits. So of course that's gonna impact. Now, I know it's a stressor, especially if you're a small business owner, you're just trying to make this ends meet. You're just trying to make it work and hopefully bring home some money so that your spouse doesn't want to kick you out of the house or anything else, right? Like you want to be able to make sure they're happy, your kids are fed and everything else. Well, taxes is definitely one of those headwinds you've got to deal with, right? Because you bring home all that money, you work so hard, and then you get to the end of the tax year or even into the beginning of the next year and you realize, oh crap, I've got a tax bill, don't I? And so what do we do? How do we actually minimize that more? I'm gonna give you some things that work for me because in 23 years of business, I'll tell you, taxes can be just a killer, especially when cash can be tight. And I've had some rough times, and I've had some prosperous times, and I've found ways to make this work out better. All right, so step number one, the first thing that helped me is get a good CPA. And make sure you get an accountant that is a proactive accountant, not a passive accountant. What do I mean by that? Here's how you know you have a passive accountant. The only time you talk to them is when you're filing your taxes, and then they spit out a number and say, here's your tax bill after you give them all those numbers. That is a passive accountant. You need a proactive one that's gonna say in the beginning of the year and throughout the year saying, all right, let's strategize. Let's make sure we minimize your tax burden as much as possible. Those are the accountants you wanna have. And you don't want the accountant that says, here, throw your money in an IRA or 401k and that's how you save on tax. BS, you don't save on tax, you just delay your taxes to another day and makes them happy because they keep getting paid in the meantime until you have to pay your taxes maybe 20, 30, 40 years down the road. That doesn't make sense. And so what we want instead is we want to have an accountant that says, let's strategize this. Let's see if there's a way we can actually reduce your tax burden throughout the year. Not just blowing money, right? Because the truth is, anytime you spend money in business for business purposes, you're reducing your tax burden. But the thing is, I don't want to spend money in my business unless I know I'm getting an ROI. The taxes are not worth it. Just remember this, is that for every dollar you make, that's not a dollar you pay in tax. Let's just say that your tax rate is about 30%. Well, that means every dollar you make, 30 cents goes as taxes. Well, I don't want to just spend $1 on something that's going to be a waste of money to save 30 cents. That's not worth it. It means you lost 70 cents, right? That's not worth it. Never let the tax tail wag the dog, right? That's my dog. That looked like a weird little fish, but that's your dog tail. Do not let tax be the reason why you do or do not do something. But if it's something that you're going to use in business anyways, take advantage of it. That's why you need a good proactive accountant that tells you, here are some things you can actually do. For example, are they telling you to track your mileage? And what's considered a business mile, like when you're driving. It's not just to and from an office, right? Most of the time they don't even want you to count that. But you can do trips. I like to do what I call Bizcations, right? Where I might take my family on a vacation or whatever, but I'm doing it with business purposes also in mind. That could mean you're going to see your clients when you're going out of town. This could mean that, or potential clients even for that matter. It could also mean that you're actually doing research. For example, is there a competitor in that area that you're going to? Maybe you're a HVAC operator or something like that. Like maybe you're somebody who's just looking at that business. Well, there's HVAC operators everywhere. So anywhere you go and travel, you might say, you know what, I'm gonna check out this company. Maybe it's just like, hey, I just wanna see what you guys do. I'm not even your competitor, even though you are, but you're not because you're not in their area. Just check it out. And just so you know, you don't have to spend all day long doing business stuff and then your family hates you because you're not spending any time with them. That's not true. For a business trip to count, you just have to have at least more than half the days of that trip that you're actually doing some sort of business during that day. It could be a minute, it could be a half an hour to several hours, doesn't matter, but some sort of business during those days. So if you went on a 7-day long trip, that means 4 of those days need to have some sort of business activities in them. And so when I go out, I do real estate, for example, hey, we might go look at a real estate property. My wife likes doing that anyways. Why not go look at it? Doesn't mean we're gonna buy it, but we might want to get to know the area and see what's going on with real estate. So you might go tour a house or do an open house or something like that. And you're like, cool, that was fun. Let's go play, kids. Let's go to the beach, right? It might be that you're going to Disneyland. By the way, Disneyland is a great place to go if you're trying to study business, Because, try to avoid some swear words here, but how is it possible that we can stand in line for an hour and a half and still be smiling at Disneyland, yet we stand in line for 10 minutes at DMV and we hate it, right? That's a great question. How can we get our people, our customers, and our clients to have a better experience, even if it doesn't seem like it's the most fun part of your work, right? How can you create that better experience for people? How can you go above and beyond? You know, when I did my company retreat, we actually went to a restaurant that was known for going above and beyond, and we used that as research to bring back into our own company. Guess what? We got to write that off, right? That's the cool thing we can do. Now, we can't write off everything, of course, but you can write off travel, you can write off the lodging, and you can often write off the food. And so those kind of things can be travel expenses that you can use. And of course, all the mileage. Now, if you flew there, you write off the flights. But if you're driving, you write off the mileage. So a lot of things you can do to reduce your tax burden of money you're spending already. Here's another thing too. What about like phone use or whatever? Like, do you have a cell phone plan? Can you reduce the cost of that because you use that? Do you have a home office? Could you be using internet from there and write off the internet? You know, the phone system to some level, right? You know, obviously your family phones might be separate, but still write those things off. Could you be writing off things such as, for example, if you have a home office and say that you live in a 4,000 square foot space, but 400 square feet's your office, that means you can write off 10% of your homeowner's insurance, 10% of even, I think, the taxes. Check with the CPA on that one for sure. 10%, of course, of utilities and everything else. You can write off a percentage of your house for using it for business purposes. And so remember that. That's something that you're already paying for personally anyways. You might as well get a little bit benefit from using that at home. Also, if you have a home office, here's the cool thing too. Did you know that there's a thing called the Augusta Rule? Now, they call it the Augusta Rule. It's actually a tax code 410A, right? But the Augusta Rule says this, is that you can actually pay for the use of your house. They call it the Augusta Rule because in Augusta, Georgia is where they play the Masters tournament for golf, right? Well, the citizens there, especially because there's a lot of money there, the citizens said, you know what? We want to make it to where we can actually rent out our homes for up to 2 weeks and not have to pay taxes on it. So that rule has been passed that works nationwide. So this is a legitimate rule passed by Congress that you can write off your house 14 days. Or essentially you can rent out your house for 14 days and pay no tax. So what this means is, what if your business rents your home, even if you're using your home office, it might even be a full day's use, but you rent it for that day. Maybe you spend $1,000 to rent it for that specific day. Well, if you do that for 14 days of the year, that's $14,000 you write off that you pay zero tax on. Money that comes home, but again, you pay no income tax on it. Now, I'm not a CPA, disclaimer here, right? Consult your CPA about these certain things. I tell you, there are a lot of accountants that say, oh, you can't do that. That sounds shady. It's not. It's law. Here's one thing to be aware of. If your accountant says they're a conservative accountant, what I've usually found to be true in my life is that they're usually more like a, how would I put it, an ignorant accountant. They say they're conservative because they really don't know the tax rules. And because they don't know the tax rules, it's kind of like saying, you know, if it's pitch black outside, you don't know where the cliff edge is, and you don't want to step over that cliff edge, so you stay a couple miles back from that cliff, so you can't even hear the water rushing anymore or anything like that. Then you're going to say, okay, now I'm a conservative person. No, you're ignorant. You don't know where the line is, and so you stay too far back, and that just costs you more tax dollars. So instead, find somebody who actually knows exactly where the line is, knows what's legal, what's not, and then gives you that good advice. So my recommendation is find a great CPA. That's a great thing to do too. Now, I would also suggest this. If you want to be able to find ways to do that, to lower that income tax or from your cash flow statement or whatever, hey, watch more of our videos. We got more things to help you improving your cash flow in your business so you can bring more money home and be happier today.